Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Friday, October 8th, 2010. Well, folks, we got the jobs report today. As we look at the charts, you can see the markets are floating higher, although not initially did they do that. Initially, we did open basically flat to slightly positive, fall to the negative side, and now have reversed to the upside. Now, why do you think we've reversed to the upside? What's going on? What's keeping this market propped up? What have I said over the last multiple videos? It's basically the dollar. The dollar is weaker here, folks, although the dollar is getting a little bit of a bid right now. But take a look. Here's where we closed yesterday. All right? And here's where we are today. So you can no doubt see that we're in the lower range. Right now, we are getting a little bit of a pop on the UUP intraday. Look at that pop right there. See that green candle? Now look at the spider. This is going to show you how closely tied the market is. Look at this long tail down. So we were all the way up here, and because the dollar's popping, we are now selling off on the markets a little bit just on this one candle. But nonetheless, right now, what you are seeing, folks, is the market floating sideways to higher after a non-event of the jobs report. And remember, the jobs report is a big thing for the markets, but today it was a non-event. All right? The non-farm payrolls number came in at minus 95,000. Now, initially, you would say, wow, that's a horrible number. Market was expecting zero. 95,000 drop? Man, that's bad. But if you look closer, and initially, by the way, when that number was reported, the futures went down 10 points on the S&P, which was a huge drop. But then they recovered almost immediately. Why? Because private sector employment inched up 65,000, 64,000 to be exact. And that 64,000 jump was key for this market. Absolutely 100% key, folks. All right? Now, again, as we look here at the market initially opened slightly to the positive side, dropped a little bit here, came down right up above this little bit of support line, then bounced all the way up and has floated up since then until this recent candle. Now, technically speaking, this green trend line has been a major trend line. You can see right from a couple days ago, the green trend line keeping here. You came down yesterday, hit this, bounced off, then finally broke. Then this morning, look at the first candle's high. First candle's high is at that green trend line. That becomes a shorting opportunity. You scalp it to the downside. Look at the market drop off of that. Next time up, would you dare scalp it? No. Why? Because it's the second hit of a trend line. You would not be messing around with that at that point. Now, you do have a topping tail here, folks. There is a topping tail. Now, you might say, as a trader, would I personally be playing the topping tail? Probably not. Maybe in the short term for a little bit of a gain here, I'll play it. But overall, what you have to keep in mind, folks, is that the volume is going to be negligible this afternoon. It's Friday going into a weekend, which kind of has a holiday. The bond market's closed on Monday. Schools are closed on Monday for the Columbus Day holiday. Canadian Thanksgiving is coming up as well. So these factors are going to keep the market very light in the afternoon trading session today and on Monday for that pseudo holiday. Markets are open on Monday, but the bond market will be closed as well as some other, schools and bank stuff will be closed as well. All right, keep that in mind, folks. I think that is very important to recognize right now. And again, the market, just you can see, is floating gently up. Dollar again weaker until this last little candle drop. And again, you can see how the market has floated up, kind of coming into key levels. This pierced, and you went right below the yellow trend line. And by the way, the green trend line goes all the way back here. It actually goes all the way back to this point down here, and you can connect it right through. But nonetheless, right from this point, you can see we broke down, beautiful bear flag, broke down. You gapped above it, ran, came down, bear flag right here, broke it again. Now you're coming back up, trying to get back above it again. A lot of resistance up in this area. Be aware, folks, a lot of resistance. If I zoom in on the charts, up this yellow line is good resistance. This pink line is a double top. That's good resistance. You can see you pierced the double top. That's your shorting opportunity, really. And the scalp already taken care of right there by me personally as I waited for a pierce of right here. Right around the 116.57 level, I took the short. Went up about 5 cents higher, but then pulled back in here. Now, again, you have a topping tail, which is another bearish signal. But as I stated, it's not necessarily the best situation because the volume is getting to be so light. So just recognize that, folks. You always have to be angling and understanding probabilities when you're doing type of analysis like this. Now, again, I'm talking intraday, but I want everyone that's watching this video to understand that everything I talk about on an intraday level can be put to the daily chart, the weekly chart, the monthly chart. If you're a long-term investor, if you're a daily investor, if you're a swing trade investor, it works the same. That's why the Research Center is so imperative to have for everyone, because every key proprietary technique that we teach in there is applicable to every other time frame on anything else. You want to chart currencies, you want to chart commodities, it works there too. Nowhere where it doesn't work, all right? That's the beauty of it. All right. 60-minute chart, folks, you can see this green trend line going back a ways. We got back above it. And on this one specifically, which again goes all the way back to the 21st, you have stayed above. You hit it here. You came above it today and now popping back up. Here's your double top right there. You can see a perfect little double top hit right there. And again, that's where I got the short off intraday here on the intraday level, intraday. And again, that's working out nicely as I took my money and ran. All right, now let's go to the dollar. Quickly touch on the dollar. The dollar continues to be under pressure. Yesterday there was a nice reversal, but we're right back down. Here's a little bit of an up move. You could make a case that this is still slightly in spirit of bear flag, but it's almost negated at this point. I mean, really, it's almost back to the lows, and once that happens, it's negated. You could still look at it and say, all right, you have a little bit of one because it's a gentler sideways move to the downside, but you'd have to see a pop-up either late today or Monday. Now, the interesting thing about this weekend, folks, is you have the IMF meeting. All right, International Monetary Fund meeting, and that could be a key thing because there might be things said about currency wars, and currency wars have to be looked at as one of the major events right now that are continuing to plague this market and be scary. And I'm literally scared, but when I talk about currency wars, folks, wars have been started for less. Now, I'm not saying there's going to be a war, but you have to look at what Japan is doing. They've come in and intervened in their currency because their currency continues to strengthen way too much against the dollar. Japan is getting upset about that. The U.S. continues to devalue based on what the Federal Reserve is doing. As we flip back to the intraday chart, we'll put up that. All right, so the Federal Reserve continues to pound the dollar down. China's getting angry because Geithner, the Treasury Secretary of the United States, is yelling at China essentially to let their currency float better against the dollar and appreciate. I mean, it is just a mess right now. You have a lot of other countries up in arms as well. And as I said, the scary thing about it is if each country is trying to devalue their currency faster than the next, it's a vicious circle. And ultimately, one currency will end up collapsing. And when one currency collapses, remember what happened with Lehman. When Lehman collapsed, all these other ones started to collapse around it, and they were saved. But can you save currencies? In my opinion, it won't be happening. So if it gets too out of control, I worry about currency collapse. Not necessarily in the dollar, but there will be some overlying or around currencies that are hovering around that could be an issue, and that could be a scary thing for this market and the country and the global setting as well. So you have to be on point here, folks. This is not a market to be sleeping through. This is a market to understand every factor that is going on, and I will discuss it and continue to discuss it in the Research Center nightly videos. Again, everything in the Research Center is included for that $49.99 a month ticker price, okay? Now, let's go to a couple other stocks. What's leading the market today? Exxon, without a doubt, is having a nice little day, although it has fallen back here. Chevron is a little bit on the weaker side, just down 6 cents. You can see it popped up. Now it's come back to the negative side. So those oil stocks are doing all right because oil is actually up nicely on the day. You can see oil running up, although recently it has pulled back as well, but still up 60 cents on the USO after a big reversal day yesterday. Now, you could look at today on the daily chart on the USO as an inside bar day, which could be a bearish flag pattern. We won't know what happens until next week, but just be aware of that, folks. That is a possibility, no doubt about it. All right, now gold. What about gold? Gold had a big reversal day yesterday as well. Gold is rebounding today, back up about $1.10. And you can see it's popping back, but still inside as well. So we really have to watch into next week to see if these inside days mean anything. They may not mean anything, folks. We'll know, obviously, once you get above the high of the reversal day, then you negate any possible meaning to it. But again, as long as you stay inside, you could be creating a little in spirit of bear flag that we need to watch for next week. So there's a lot of things going on. Next week, earnings will start in earnest. Alcoa reported yesterday after the bell. Great pop on Alcoa today, folks. My partner had mentioned a possible short on Alcoa above 13. It went to 13.13 and since then has pulled back. So very nice call there. And what you want to do is just draw a line right across here, folks. Take a look at this. Perfect. See this little gap fill right here with this little ticket or a little high level? Just draw that across, and exactly to that point, the chart of Alcoa went today. So a nice little chart right there. Good call by my partner there, Nick Santiago, Chief Market Strategist, here with me at inthemoneystocks.com. And again, we're just going to continue to keep everyone fully in the loop of what's going on in this market. The market, again, on the spiders is not having a nice little push today. Very nice push, no doubt about it, although you still have that topping tail in effect. If you get above the topping tail, look for the yellow line to be hit. That'll be your next point of interest, and that should be a very, very nice point of a possible scalp short that I'll be taking as well. All right, enough said for the day. Just one more reminder. Have a great weekend, but join that research center. If you're an intraday trader, if you want intraday analysis, you got to join the chat room. But again, the research center is the number one thing out there listed in the market, rated number one over everything else for the information we provide, education we provide, and the calls we provide on the markets. Join now. See you soon, guys. Take care.